All right, we are live with Michael Zanzini, who for the rest of this episode, I'm going to refer to as Zanzini because that's the way I speak to Michael when I talk to him. I call him Zanzini because everyone else calls you Zanzini.
Correct.
So Michael Zanzini is here from BM Select, and Lorenzo Poda is here from BM Select. I'm going to call you Lorenzo.
Yeah.
And we were just talking about this Proper 12. The reason we have this Proper 12 here is because when we booked this, you guys said, hey, are we going to have tequila? That's why we're drinking right now. So what time is it? It's 10:15 in the morning.
10:15.
And you guys showed up, but I didn't have tequila in the freezer. And I thought you guys might appreciate a cold tequila. But I had this Proper 12 bottle that we hadn't opened.
And the only thing I will say, if the camera can see this shot is like maybe a triple.
Yes. That's not even it. No, this is coming from guys who drink Ciroc in the summer like it's going out of style. But no, that's not it. That's like maybe a double shot.
This is pretty big.
It's an espresso cup. So
it's pretty big. It's
we'll start off with just sip it. It's nice. It's
cheers. We gotta go down.
Just sip it. No,
thank you for having us.
Thanks for being here. Lorenzo, for the record, did finish that in one shot. You're crazy. So let's get into this. How did you guys? I guess Zanzini, we'll start with your story. I don't know. How does this work? Like you're how old? You just told me it was 33, 32. 32. And you've been working with mortgages for 7 years. So give me that path. Like how then at 25, I guess, at 25, you just walk up to BM Select and Dave Butler and say, hey, I'm going to start working with you. Like, how do you get to that point?
So you're along the right track. So basically speaking is my parents were Rockstar members. They bought a couple houses through Rockstar. Working with Leslie Kitchen was their coach at the time.
Oh, no way.
Yeah. And my parents actually brought me to Your Life, Your Terms event when I was a lot younger, like fresh out of university, like starting working, doing dead-end job kind of thing. And came to one of your events, seeing you and Nick up there doing your presentation, whatever, young guy, 24, 23 years old. And flash forward, my parents were going to get pre-approved. They're ready to buy their first rental property. And they asked me, do you want to come with us to go meet this broker? I was not doing nothing. Went down to our old office there. And sat down and literally met Dave in the flesh when I was like 22, 23 years old with my parents, getting pre-approved the old-fashioned way, coming in, going over the numbers.
Did he have his Pittsburgh Steelers suit on?
Absolutely.
Yeah, okay.
True story, yes. Pittsburgh Steelers hoodie on, all of that. Shorts and flip-flops, if I remember.
Yeah. And he probably introduced himself and said, oh, sorry, I didn't expect to meet any clients today. I don't always dress like this.
Absolutely.
A year later, you realize he always dresses like that.
Yeah. Wouldn't have it any other way.
No.
So basically, parents bought their first property, bought a second property, bought a third property, going through life changes, you know what I mean? Growing up as a young man, trying to figure out what I want to do with my life. And I remember it was like one Christmas. I was like, Ma, Pa. I'm Italian. That's how we call our parents, Ma, Pa. I'm like, I don't know what I want to do with my life. Do you have any recommendations, any suggestions? And they're like, I don't know. You're a good talker. People like you, right? Maybe you should go and maybe you should get into real estate or talk to that Dave Butler character that he was a good guy, very knowledgeable, liked his personality. Why don't you go try mortgages? Why don't you call him up? Sent him a quick email. My mom still had his email. Said, hey, Dave, I'm Maria and Giancarlo Zanzini's son. You willing to meet? He responded back like a day later. He's like, absolutely. Come see me after the Christmas holidays. Went in there, walked into the room. How are you, buddy? I remember you. You're past clients. Like, your parents are past clients. Were you here for a job? And he caught me completely off guard. I was playing the whole Christmas holidays.
Pull the mic a little closer.
I was literally planning my whole pitch. Like, how am I going to go and do this? Like, sell myself like young guy, work for free. I don't care. I just want to learn. I want to take me as your mentor kind of thing. And he threw a complete curveball at me, literally within 20 seconds walking in. He's just like, you want a job? When do you want to start? Boom. Literally from that day forward. Like, have been.
It's
there
funny when you
since.
catch someone, especially an entrepreneur like Dave, and you probably just caught him at a time where maybe he was breaking and he needed help. And most people in that situation don't have time for formal interviews and steps. If you're going to a big corporation, they're going to have their filtering process and that thing. But Dave, you just found him at the right time. So kudos, man. Good on you for walking in like that. And then how did it start? Like, you had no experience. So what were you doing for Dave? Just literally, we were joking about it earlier, just taking papers and putting them in a filing cabinet?
Yeah, like literally like the old school story of like in the mailroom, like filing papers, printing documents, like literally just being a service to anyone that was there in the office, then starting to understand a mortgage, learning to read credit. That transitioned into working with the rent-to-owns and credit counseling.
I forgot you were doing that. Yeah.
And honestly, Dave always said to me, he's like, buddy, you're going to hate your life. This is crap. But what I'm telling you right now, this is going to shape the foundation of where you're going to be if you stick this out. Understanding credit and working with clients. Sorry, I'm a little bit parched.
No, it's good.
It's that shot. We're drinking whiskey at 10 in the morning.
Yeah, don't pretend that you can't handle, well, you two can't handle one shot. Hey, yeah, because that makes sense to me that you're just looking at credit reports. It's kind of shitty. You're probably not dealing with clients directly a lot at that moment. So did you go through a period like 2 or 3 years in where you thought, well, this is pretty shit? Like, fuck this shit. I'm going to quit this shit? Like,
No,
did you hit that?
Never, because the good thing about Dave, and I say Dave, but I also got to give kudos to Dan Patton as well, who's another big part of my mentorship and have shaped me to be where I'm at today, is both of them said they would encourage you every day. How you doing? Little step by steps. This sucks. Trust me, by understanding income and understanding credit, that is a mortgage. It's credit, income, and down payment. If you can down pact credit and income and understand what you're looking at and it makes sense, that's all a mortgage is. And the more you do with that, and the more that you deal with that, the better you understand it, which then transitions you to understanding what you're looking at. Now you can relay that to a client, and now go and relay that to a bank and do a deal. So you're going through the ranks, you're dealing with in the trenches, but it shapes you to where I'm at today, which I'm proud to say is literally the second man in the lead sales at our office, working with Dan Patton, working with all the clientele. And I only got there by starting from the beginning.
Awesome, right? Man. Good for you.
Yeah.
I'm pumped to hear that because I think people your age right now, it's kind of, I don't know, I guess every generation kind of reflects back and says, oh, maybe these guys have it harder. But I just think like, man, I just feel like my generation was able to ride this wave. And maybe we didn't know we were riding the wave, but there was a big tech boom.
Yeah.
Where like the software boom, we just kind of like, if you just got into that industry, you kind of rode this awesome wave. And then if you got into real estate, you kind of rode that wave. And there was a moment there where I looked at your generation. I'm like, how are these guys, like, how are they going? What trend are they going to ride? And I think that has been very cool that you've kind of hopped into the real estate industry, because that has turned out to be a massive trend with low interest rates for the last decade. And now I have a better picture with things like, and we can talk about it with the way technology and money, things like Bitcoin's evolving. I'm like, okay, there are different opportunities that didn't exist when I was young that these guys are going to be able to understand and hop into.
Absolutely.
And it's going to be a great ride for you guys. So good for you for setting yourself up, man. Seriously.
It was a tough journey. I'm not going to lie. A lot of people would have cracked. Dan and Dave said it all the time. There's people that have been in your shoes, similar with Lorenzo. They don't make it.
Well, and so why? Just because the work was just after deal, the paperwork just gets monotonous.
A lot of it's super fast paced, it's very intense every day too. You're under a lot of pressure, right? You're dealing with someone's biggest purchase of their life, right? So especially if it's investors have a lot of moving parts going on with a quick closing date, or it's someone trying to buy their first home, and it's someone that this is the biggest purchase they'll ever make. So it's a lot of pressure on that end from the client, obviously, to make sure it goes smoothly. Combined with the fast pace, dealing with the bank, multiple moving parts, a lot of people do crack under it. But so yeah, it's very much some of the strongest do survive, and the weak will fall off.
And then so for Michael, I can't believe I called him Michael. Michael, we'll come back to you. We'll come back to you in a second. Then so Lorenzo, like, how do you get into? Because now you're 23.
Yeah, 23
and you've already
now.
been doing it for 4 years. So
I think 4 or 5 years.
So at 18, 19, walk me through that.
I think it was what ended up happening. So when I was in grade 12, I think. So my dad was obviously Sergio Pote, and my mom. They're long-term Rockstar members as well. Been there for a long time. And my dad, when I was in grade 11 or 12, just on the weekend, just brought me to a Rockstar conference. And I remember I was in grade 12, and that day, I swear to you, that day might have actually changed my life. Because that was the day first I met Dave, and then actually after that I ended up meeting Dr. Cohen. So when I actually went to that conference, I had a concussion that day. And so I just went there as all concussed.
Because we had him speaking at the event?
Yeah, that was the first time he ever spoke at the event. And
Wow.
I remember him going up saying, I treat concussions. And I was like, oh my God, someone could help me here. 'Cause I was just screwed up for a bit. And so I met Dave that day and then met Dr. Cohen. I remember going home being like, if I just met like two crazy, like, what am I going to be in the next event? Like, I was really excited for it all the time. But so I met Dave at the event there. I had always had part-time jobs as a kid growing up, like little side hustles in high school. And
like what kind of part-time jobs?
Like I started off at like grade 5 as a paper boy. Then was a soccer referee, worked at grocery stores, like marketing companies, just wherever I could make like an extra buck. Basically, I was just kind of figuring out a way to do it at that time. And so I ended up saving up a little bit of money, not a ton, but it was enough to like buy a house at 5% down when I was in like grade 12. And it was especially when the houses were very cheap too. And it was like, obviously you can buy a house for like $300,000-$400,000. And so I went to Dave in that day, and I was like, hey, like I'm trying to buy a house, want to be like my dad, like I want to buy a property too. And he's like, okay, perfect. So let's get started. And started off that day, I had to go get a credit card first. You have to establish credit. And then I called Dave. He told me what credit card to go get just to get started with it. And then they didn't let me get the credit card because I was too young. So I called Dave. I'm like, hey, like, what do I do? I'm not 18 yet. So he's like, well, I guess we just got to wait. So then he's like, call me back.
So you were trying to buy this house at 17 years old?
Yeah, yeah.
Would the banks have lent to you at 17 years old?
Probably not. I didn't have a credit card.
Okay.
So yeah, no. Like, I had no idea, right? And my dad just kind of let me figure it out. Like not necessarily let me figure it out, but he knew it was kind of like just let me kind of explore it. So yeah, no one really stopped me in that sense from figuring out maybe you're too young for it. But yeah, so then called Dave back like probably the day after my birthday. Said, hey, I'm ready to go get a credit card now. So got the credit card set up, and then I was in university at that point because I was 18.
And you needed the credit card to establish credit. And how long did that take? 6 months?
Yeah,
9
usually
months?
6 months to a year. So I didn't end up buying a house right away. I kind of went down a different path in that sense, but I can get to that too. So, but yeah, I got the credit card, started establishing credit. Dave coached me through how to build it up, put a balance on it, pay it off every month, pay the minimum payment some months, just to make it show like you're like always paying the credit card down. And so I started building up my credit in that sense. And then I was in university looking for obviously summer job when you come out. And I remember I just called Dave and I was like, so everything's been going well. He seems like a really nice guy. I wasn't like me personally wasn't big into the corporate world. My parents and I saw kind of how it worked. And
why?
Honestly, I don't know. I just didn't really like
It just wasn't resonating?
Yeah, it wasn't resonating with me. I'm very like not necessarily not like proper, but I wasn't really like I just saw everyone seem fake to me, to be honest with you. Where it was just in a sense that everyone's always just kind of like just smiling at everyone else just to make sure everything goes smoothly. But there was nothing that was like kind of real there. And I'm very much I like kind of having like a small, like a good circle of people. Like I'm big with team environments, and the corporate was kind of it just seemed like everyone was just going through the motions there. And my dad was big in it too. He was like kind of always like, yeah, he's in the corporate world, and he kind of always told me it's not necessarily like where you want to be, right? And so that was kind of a big part looking at it too. So I don't know. I always looked at small business and kind of looked at being more of an entrepreneur or something like that is more something I liked. And yeah, so then anyways, asked Dave for a job because that's where I wanted to go. He said, yeah, absolutely. So the first summer I was there, I was just filing papers, kind of like Mike was, learning credit, things like that. And then so that summer went by. Everything went well. I had a good time there. Started learning as the summer went on, which was great. And then the second and third summer was kind of where it started taking off for me, essentially. So that Dave was a lot heavier involved too in those months, those summer months with the company. And I just started sitting with him pretty much every day from that point on until probably about a year ago. Obviously, I was in school part of the time too, but yeah, I started sitting with him, learned mortgages start to finish essentially, and yeah, that's pretty much kind of where we're at now. Now we have a team. I'm kind of working with Mike every day.
Yeah, and so what are you doing now there?
Yeah, so I'm running the underwriting team right now. So if anyone wants to know how a mortgage works start to finish, essentially what you have to do is obviously the file comes in, you speak to your agent, but then there's a whole back end process of dealing with all the lenders, working with obviously the banks, the paperwork, everything like that to get the deal approved. That's kind of the bones of mortgages, just underwriting, right? So I manage the team right now of that. We have about 10 people hired, probably 15 more for the summer. Obviously, we're going to be doing a big growth phase coming up. But 15
more for the summer.
Yeah. So yeah, we ended up noticing too. A big thing that we ended up noticing is a lot of people that we've hired in the industry. We always used to hire people like we want experience, right? You want someone who's been underwriting for like 5-10 years, and never have they worked out. So it's been one of those things that they've never worked out. And all of our best people that we've hired up, like BM Selector that Dave's brought on, necessarily have been myself, Michael. We've had one of my buddies comes on named Marco. So it's always been kids coming out of school. We have like all girls and one girl named Tasha. Like it's always been people coming out of school that have been our best and like just young and hungry, wanting to learn, that have been our best employees. So we kind of just this year said like, fuck it, let's just try to go this route here. And so we ended up doing a bunch of
Did you just curse?
Yeah.
Am I allowed to do that?
You're allowed.
Sorry.
You're allowed to
I heard
swear.
Tom.
Yeah, you're allowed to swear. You're allowed to swear. You're allowed
Sorry,
to
let's
swear.
get into it here.
You're allowed to swear. Yeah,
Sorry.
It wouldn't be authentic without it.
No.
So yeah, so I kind of so we just basically said, yeah, let's go with the let's go try to hire university kids. So we did a bunch of, it was mostly David and myself, and then we did a bunch of university campus recruitment tours and things like that, and had a ton of kids want to just apply for our jobs, and we ended up hiring about 15 of them. So some are going to be full time, some are just summer students, a little bit.
That's for this summer.
Yeah, starting in May.
Wow.
Yeah, so we're gonna kind of do a big growth phase. So yeah,
that's gonna be a shit show right there with 15 new people starting.
Yeah,
and this is mostly remote.
All remote. Yeah, so all remote. So we're getting rid of the office. Our lease comes up, so we're gonna be fully remote. Our company's gonna be fully remote.
That's crazy.
Yeah. So yeah.
So
it's all
okay,
through
so
Zoom.
then you're managing the underwriting team.
Correct. So basically, when a deal comes in, start to finish, obviously Mike, if you're your agent, he'll talk to the client, walk you through everything. Then the file kind of gets passed over to myself and my team. We put everything together, send it off to the bank, deal with them, and fight for the approvals, basically, and work with kind of the intricacies of the bank all day, trying to get approvals in, make sure clients qualify, things like that.
So when someone, I think no one understands that what goes on behind the scenes to get a mortgage. So people will just call you. I'm sure you get this call like, hey, I need a mortgage, probably need it by tomorrow. Yeah. Or, I need it for next week. Yeah. What in today's world, we used to really push Dave sometimes for a 2-week closing, and he would curse, but he would get it done. Yeah. Is that just impossible today? Yeah. Is it 3? Like, what is the minimum now? And let's talk about, is there a difference between primary place of residence mortgage and rental property? What's the minimum? 3 weeks? In
terms of timeline, like
4?
The primary residence and rental doesn't necessarily matter. It's all dependent on file normally. So if you're buying a primary residence and it's your first home, it's a lot easier for the banks to do as a file. They're underwriters. It's a lot easier for them just to go process one file. So bare minimum, and I wouldn't necessarily suggest this either because you're really putting yourself in like a sticky situation, would be like 3 to 4 weeks, I would say. Okay. The 2-week thing before, I remember back obviously when I was watching, it was possible. The banks just ever since COVID started, it's like even.
So if somebody has 3-week closing and you're not hearing back, it's because you've submitted everything, but the bank just can't process it on their side.
Exactly. So we've even seen times, especially in the depth of COVID, where some of the banks, like I guess what ended up happening, a good way to describe it too is what ended up happening. So COVID hit, the banks laid off a bunch of people, right? People got laid off because obviously everyone expected everything to crash. But real estate ended up going up. So if they had 100 people for a job, they now have 80 people for a job that needs 120 people. So it's just the backlog went crazy there, and it's just now we're starting to kind of come back from it.
And the biggest hurdle I guess you have to go through is probably the people applying for the mortgage don't give you a complete file, like they're missing papers.
Yeah, there's a little bit of that too. Obviously, document chasing, like who wants to hand in thousands of hundreds of pages?
I hate it. I just create a Dropbox folder. I don't know if you still do this, but with Dave, I used to just share a Dropbox folder and say, Dave, I don't know, everything in my life is there.
Plus what you need. You take it. Take what you need.
I used to freak out.
Yeah, it's nuts. So a lot of it's documents wise, and a lot of it's just getting getting deals to work. Obviously, like mortgage rule, like everything's obviously underwriting is very not necessarily tricky, but you have to obviously be good at it to get deals approved, especially when you have investors with multiple moving parts, buying a couple properties at once or things like that.
So this is where Michael Zanzini, you're talking to people saying, hey, you're on your second property now. We're going to need to do this, this, and this. Like, so you're setting the stage for what we need to get done for an approval.
Of course.
And then after that, it transitions over to kind of Lorenzo's team there to kind of take that home.
So then, so what ends up happening is that when the file comes out, Mike will talk to them, give them the kind of introduction. We'll work on how to get them approved for Mike. Obviously, he's obviously crazy busy too. So we'll work on my team, work on how to get them approved in that pre-approval stage. So we'll be working the file through there. So a lot of members or clients that come to us will deal with some people in my team right off the bat. And then, Mike will talk to them, or Dan, whoever the agent is, talk to them, let them know, here's what you need to get approved for the mortgage. Here's what we can get you approved for. Here's the plan to buy 5, 6, 7 properties if that's what they're looking to do. And then, go get an accepted offer. And then again, we'll work from there once the deal comes back in to get an approval.
Okay. So then for you guys to really give the best advice, you need paperwork from them right out of the gates, which everybody hates.
Yeah,
because
exactly.
they're like, listen, I just want to talk to Zanzini. Zanzini, I want to buy 18 million properties. Tell me how I'm going to do it. But your response is like, I literally cannot tell you how to do this without seeing what? Income, credit.
Credit is like a lot of people are like, but what if I'm not ready to buy right now? I don't want to run my credit. Well, here's the God honest truth is we can give you a rough estimate, a rough guideline of where your numbers are working, give it to us verbally, provide your own credit reports, but it's not 100% accurate because the biggest component too is credit score. Your credit score is vital to an application. That could be the difference.
And if you pull the credit score, everyone's panicked about pulling credit scores, but isn't that like a soft, am I using the right language? Is that a soft?
Not necessarily a soft hit, but it's a little bit of a myth that like, hey, my credit score is going to drop 50 points. That's not really going to happen. It is technically just a regular credit hit.
Okay.
But it doesn't necessarily consider like all of a sudden you would be dropping 50 points.
So you haven't seen it where you've pulled someone's credit and you've been the difference at them qualifying or not qualifying.
That's literally never happened probably in the history.
But you realize in all the real estate investing books, that's like threatened to all investors. It's like never get your credit pulled.
And to be honest, a piece of it is the fact that they don't want people shot. Like obviously mortgage broker, you don't want someone going to 5 different mortgage brokers if you're a mortgage broker, right? So it's like, hey, don't let anyone pull your credit, right? So
and sorry to interrupt you, but that's the biggest thing is you never recommend someone dealing with 7 different banks, 5 different mortgage brokers, having 15 different options. You need to be working with a trusted person, a trusted company, a trusted brokerage or your bank, whoever it is, mortgage specialist, and working with them because essentially Running your credit once or twice is not going to really impact you. But having it run multiple times, now you're credit seeking. Now you're dinging your credit score, stuff like that, right?
So credit seeking is an industry term for this guy's, this
so it's
person's hopping around.
Exactly. If you're getting pulled like 1, 2, 3 times, not a big deal, especially if you're applying for a mortgage, because obviously Equifax, they understand you're going to might shop around with lenders, things like that. So that's not a big deal. But when you're getting to, hey, my credit's been pulled like 7 times in the past 6 months, and it's been pulled by a car company, TD pulled it for a credit line, Scotia pulled it for a more, like, when you start kind of going crazy like that, that's called credit seeking.
So one pull by the mortgage broker is not really
going to
be a big deal. And that gives you, Zanzini, the information you need to give them an accurate portrayal of what you're going to be able to do.
That's the key word there, accuracy. That's all we're trying to do here is provide accurate numbers so that you're confident out with your coach, out with your real estate
And what are you
shopping.
looking for in a credit score? Is 680 and above still considered good credit?
Yes. Yes.
So 680 on a credit score is still considered good credit. I used to subscribe, I still do, but I rarely check it anymore, as an Equifax like alert that anyone who pulls my credit, I'll get like an email.
Yes.
And then I think I get like a quarterly report that tells me my credit score. I always found that super helpful.
It is cool. Just to be like kind of one thing, we have this conversation with clients all the time too. Those reports that you get are a lot of times different than the ones we get from the banks get. Yeah. So
why?
However the algorithm works, or however it posts, like it's similar.
So if I see 725, you'll see something else?
Our score could be like 695.
No.
So it's not necessarily, I'm not going to say way off. You have good,
Why is the world always
at the end of the
shitty
day,
with
if you
this
have
shit?
if you have good credit, you have good credit.
Yeah.
So it's not like, I wouldn't be something like people look into, but we've had times where clients goes, my credit score is 875, and then we pull and it's 740. Again, not a big difference in the world of the bank. They don't care if you're 740 or an 875.
Nick has like 820.
Yeah.
He's very proud of that.
He's got you beat.
Oh, yeah. I tell him, get a tattoo. Why should you get a tattoo if it's so good, man? I don't know why I pay everything on time. I have like no balances anywhere. I don't know why I'm getting the 720.
It's just not good. So once you're over that, like even 730 is like a new barrier that kind of coming out. Once you're over that like 700 mark, though, it's like you're just like, you're in. Like, cool. You don't get extra points for being 900 versus a 750. So yeah, once you're past that, it's not a big deal. So when people start nitpicking at numbers, it's like, doesn't really matter.
It's kind of a waste of time.
Yeah.
Okay, so then they give some information, Lorenzo, to BM Select Mortgages.
Yep.
Your team collects a bit of that.
Yeah.
Zanzini then gets on the phone with someone and says, I can see the credit score that you have. I see your income. I guess they're sharing. What are they sharing for income?
Yeah, so if you're like regular, like say you just have a regular job, you're giving us job letter, pay stubs, T4s, things like that.
Okay, so I give a
returns.
pay stub saying, hey, here's how much I make.
Yeah.
Then that gives you, Zanzini, enough, or what am I missing here?
So it all depends. Every client's different, right?
Other mortgages.
Yeah, exactly.
Yeah.
If you own other properties,
Okay.
if you have rental properties, lease agreements, mortgage statements, tax bills, we want to start to basically formulate the file. And then we're basically qualifying on your debt service ratios, right? So that's all a bank
So
is
then
looking
you're
at.
taking all this, because I've always been, I'd never want to share information to anyone. And if I didn't know you guys, I'm like, fuck, you're not getting my fucking information. The less, the better. That's how I've always operated with the banks. But I've come to trust BM Select a lot. So I'm like, okay, these are the guys that are going to just know my whole life.
Yep.
So I just usually tell Dave and Dan, here's everything.
Yeah.
Like, here's all the mortgages to my name. Here's everything that's going on. So that's ultimately what you're looking for. Of
course.
Because then when you submit a new approval with an investor who buys a property, you're not surprised when the bank says, oh, you didn't tell us about...
Correct.
Exactly.
Like Bank of Nova Scotia doesn't say, you didn't tell us about this TD mortgage that these guys have.
Correct.
That kind of stuff.
Correct. Yeah. And this might sound silly to say, but here's the truth. With COVID, with everything going on over the last couple of years, the banks have become a lot more strict and stringent, from qualifying, and way more document heavy than they've ever been before, right?
So what does that mean? So before you didn't need to provide what?
If you were able to provide maybe pay stubs that are 60 or 90 days old, they would take that.
Oh, now they want the current.
They want something current because people are getting laid off.
Yeah.
People were taking CERB. People are doing this. Maybe people are self-employed. You're already in a year in advance with your T1s. They want to see you're still working. Income continuity, they use the term. Okay, great. Here's your tax returns being self-employed. Show me you're still operating in 2021.
So how does a self-employed person show they're still operating?
So yeah, this is the biggest thing. This is the biggest changes with COVID that we've noticed. So a self-employed person before COVID was show me your 2-year tax returns and your T1 generals, whatever you claim, they'll take the average, move on with your day. Now it's, okay, show me your 2-year tax returns. That's just to prove your income. That's just the number they'll use to qualify now based off what your 2-year tax returns are. But now what they're going to say is, give me also in the condition of that, want to see 6 months of your business bank statements showing that you're still, like, your income's still going in. So if your mind starts kind of racing, it's like, if maybe you're a business that was affected by COVID, or you're a business that, hey, like, going through a rough time right now, there's not a ton of deposits going into my bank account for whatever reason, the bank will, like, they'll approve you first because they don't ask for it up front necessarily, but in one of their conditions on that commitment you get, it's going to say, hey, 6 months bank statements or GST returns. There's a couple options you can give them, but something showing you're still working, basically.
Wow. Okay.
Yeah.
So to touch on back to your point, trust me, paperwork, document collection, it's the biggest pain in the ass of our business and working with clients. But the reason why we request it up front, because we don't want surprises on the back end. The more we gather up front, the easier, the smoother the transition is when we're closing.
And we've seen over the years, so many people will throw you guys curveballs by telling you one story of what they own, and and then day of closing comes out and the bank comes back and says, oh my gosh, you didn't, we just discovered, I don't know what they pull, but I think the banks can get more information.
Yeah, or
now.
most of the time, sometimes it's like, hey, this property here we have, there's no mortgage on it. And we're saying, okay, no problem. Like, sure, we'll believe you.
But then there was a mortgage.
And then the lawyer will call you the day of closing saying, hey, we did a title search and there's a mortgage secured to it. And that changes everything now. Now you're the day of closing.
Yeah.
Or sometimes it happens, clients be like, I own this, this, and this. And they don't tell us that they're on title of their daughter's house that they co-signed for. Now there's a whole.
But to be fair to them, if they're not in the industry, maybe they kind of dismiss that as not a big deal. Like, I understand from your point of view, you might think, how could you not think that's a big deal? But I could honestly see myself doing something like that.
Absolutely.
Oh, it's common.
It happens.
It happens. But that's why we're very, I don't want to say vigorous, but that's why we jump on the phone call, whether it's myself or Dan or the agent. We want to get these fact-finding questions because we want to make your file accurate. If you're on title or own any properties that you're on title on or own, we want those mortgage statements. We want those tax bills.
So documents collected, you're getting on the phone and saying, okay, now I have a complete picture. I see your income. I see it's current. I see credit score. I see that you have 2 or 3 other mortgages. And now, as Michael Zanzini, you're able to say, here are options to go forward.
Of course, because depending on the game plan of every client is different, right? Maybe they do have goals and aspirations of owning multiple properties. Maybe it's just 1 or 2. Well, now you start to narrow down and segue down which banks we should be utilizing.
Because if I want 4 properties, you're going to take me perhaps in a different order of banks than if I wanted 1.
Correct.
Okay. And what about monoline lenders? Do you guys work with monoline lenders?
So monoline, we do work with them a ton. They're good, but they have their own place in like the industry. Like with rental properties, they're not huge. We don't like working with them. The banks have a stranglehold on the rental properties.
Okay, so monoline lenders are usually
for first-time home buyers.
Okay.
You're buying an owner-occupied.
I'm pretty sure we have a monoline on a rental.
Yeah, that would have been a different reason back in the day. There was definitely use for them back
You're
before.
calling me old right now? Okay, no. Go.
There's definitely a use for them before. They're a lot less useful now in terms of investing. If you're buying a regular house, they're great with the rates. What ended up happening, there was a lot of stuff that happened with the Bank of Canada a couple of years ago where they came out with new rules essentially that allowed the banks to have a lot bigger access to the rental pool. So the monoline lenders basically, the only place they can compete right now is in the rate game. They can't really compete on rentals because of the 30-year amortizations, because of the ability for lines of credits and things like that. So they kind of left that space in the rental game and said, okay, we're just going to compete for rate. So you'll get fantastic rates there on owner-occupied homes, but if you're trying to build a rental portfolio, it's almost impossible unless you make like $700,000.
Okay, so you're dealing with the big banks.
Yeah,
basically.
exactly. We deal with the monoline lenders, all of them too, and if it fits there, we'll definitely go there. But it's not necessarily always your best option.
Okay, and then why would somebody go to a B lender? And do you guys deal with B lenders?
All the time.
Okay, so why am I going to a B lender?
There could be a couple things why a B lender is advantageous. Primarily, it's more so used for either people that has stressed credit, imperfect credit, we like to say, that you may not fit the guidelines of the A lender banks because of your credit score.
So below 680.
No, not necessarily.
Okay.
Let's say below 600 normally.
Oh, okay.
But if your credit's like a 630, but you have a lot of recent missed payments, like it's definitely a little bit of a gray area. If you're below 600, you automatically go into like that's just like you're not in the A lender category.
We have seen the one-off with an exception. Maybe husband's got a low score and the wife's strong. We've seen those exceptions, but in all fairness, we always try to guide and coach people. Ideally, we'd like to see you at above 680. If you're in the lower 600s, still workable and doable to still fit with an A-lender bank. Please don't be discouraged to any listeners out there. But ideally, yes, 680 and higher is the go-to. If you're below 600, that's kind of where we get into the murky waters of maybe the A-lenders aren't going to consider us, maybe needs a little bit of time.
And what's the rate difference between an A-lender and a B-lender right now? Ballpark it. It doesn't have to be 100% accurate.
Well, the truth of the matter is it's very similar right now. The spread used to be huge. Now it's very, very close in the sense that a B lender today, if we're talking rental, 20% down, 25% down. Sometimes the B lenders want 3.25% to 3.5% is usually what we see. Sometimes even less.
Hardly any spread.
Yeah.
Because a 5-year fix from an A lender is going to be what, 2.99 to 3.15?
Exactly. 3.14 exactly.
Okay.
Depends on where you go exactly.
So I'm so used to in the past B lenders being 2 points higher.
So yeah, the way the B lenders works, they get their money. It's not necessarily, they're not really regulated, but they're regulated obviously, but they don't work with the way get their money the banks do, right? They get their money from institutions, from like hedge funds, things like that. So whatever they're borrowing at,
so
that's
they're
how
not
their
borrowing
spread
from
works.
the bond market.
Exactly. So like, so for Equitable Bank, for example, a big B lender we work with, they get, so their rates will change depending on how their institution lends them money.
Yeah.
Got it.
And
Okay,
usually
I didn't know that.
usually what we see, the B lender usually takes a lot longer to catch up with them raising their rates. So when the A lenders and the big boys start doing it, it takes them a little bit of a while to catch up.
And we're in that we're in that phase right now where A lenders have increased, so B lenders really haven't. So the delta is really small. That's interesting. That's advantageous. If you need a B lender, you don't feel like you're totally getting ripped off.
But
sorry, one other thing too, like just to add on to Mike, if you're self-employed,
that was
sometimes
the
we
point
take
that
a
I was
lot-
going to say to answer your question.
B lenders, because B lenders, the cool thing about them, if you're self-employed, is they have zero look at your tax return. So say you're someone making a good amount of money, 6 figures, whatever you're making, but you want to show 30 grand on your taxes because who wants to pay those? You're now B lender, no problem. They'll just look at your 6 months business bank statements, take all the income you make in there and qualify. They will never look at an NOA, you're a T1 general, nothing like that. So when the rate's almost comparable, now you don't have to pay taxes on your money if you're self-employed necessarily. It's not a bad spread. And even if you're paying a higher interest rate, you got to kind of look at, A, am I buying a rental? Is it kind of write all this income, like all the rental, all my expenses off? B, am I saving money by not paying the taxes and just paying the interest? The higher, little bit higher interest.
Okay. And that's every self-employed person's problem is sometimes they're earning, but then after deductions, they're showing a real tiny income, and the A lenders generally don't like them.
Well, the A lenders, you got to fit their box, their magical bank box.
It's a great game, man.
Right?
They have a great gig. Okay. So then now if I come to you, can I also do, in the past, we were just talking about this before we started recording. In the past, I couldn't really do credit lines very easily or well with mortgage brokers.
Yeah.
Now, sometimes you can.
Yeah, so we've obviously always, Scotia, obviously big bank, one of the banks we deal with, Scotia, they've always been really good.
Okay, they've always allowed it.
They've always been really good.
I think I have one through TD, and you guys couldn't do a credit line.
Yeah, so now TD actually recently, as of the beginning of this year, they've actually allowed us to like access lines of credit too. So now we have multiple options basically for
I guess they were trying to
clients.
drive people like me to the bank.
branch. Yeah, it's one of those things like obviously the bank, they pay brokers obviously more than they pay their branch people. Like obviously on a deal, so it's then now them saying, okay, they want to get more business. The broker channel, whenever someone wants to get more business, the broker channel is a great place to go, just because
your hustlers paid on commission. You're going to get deals done.
Exactly, right. Well, a lot of times it's, and again, not to knock any bank person, but we're more experienced, sometimes more well versed in all the other lenders, so we'll be able to kind of guide them in the rest path. So people, when banks are looking for more income, necessarily build their revenue, the broker channel they come back for, get their revenue, and it just depends on who's in power at that point.
If I have an existing TD mortgage, can I now come to you for a credit line?
Correct.
Or no? I can't.
So yeah, you can. So
even
they
if
have
it's been years.
they have a little rules about it. Sometimes they want to get you like a new mortgage, like a new TD mortgage, so they'll make you like break the old one, get a new one.
Really?
But you can do things like a port and blend and stuff like that. So it's not necessarily like a bad with TD. Scotia, you can just come and add it, no problem. But yeah, there's like some rules around it, but it's definitely we'll make an option work for somebody.
And when someone is breaking a mortgage, the things for them to consider would be on a fixed rate. It's what, 3 months?
No, so fixed rate. It's called interest rate differential.
Yeah, that's right. That's the horrible one.
That's the horrible one.
Yeah, that's the horror story.
That's the horror story where you hear hey, my penalty's like $32,000 on a big mortgage, right?
So can you map that out? Why is it $32,000?
Yeah, so say you have a mortgage of like $800,000 and there's 3 or 4 years left on the term, and you're paying 2.9, or so let's say 3.94, and you bought it back in like 2017, 2015 when rates were super high, or not super high, but I guess relatively high. So what the banks do is they have to now relend that money out after you not paying them 3.75 when you break the mortgage. They have to relend the money out at today's rate. So the bank's losing money, which obviously they never want to do. So they're going to charge you the interest rate difference on that, and that's how your penalty works. It's called interest rate differential,
or the difference of a 3-month interest. But the longer you are in your term, the bigger your mortgage. The difference in the spread of the rate that they're going to lend out, 9 times out of 10, they're going to take the higher amount. That's why the variable rate. Not saying that we push the variable rate in any way. It's all caters to.
We usually try to tell people get the variable rate,
but
go on.
But what I was going to say, as an investor, it's just the variable rate gives you that flexibility, that 3-month interest only penalty, lower interest rate compared to the fixed, and you can have the option of locking it at any time, calling up your bank, reaching out to them.
That's what most people don't know, and I've told people, hey, look, start with a variable. If you can't sleep at night, just lock it in. You're never going to get the best rate when you lock in.
Of course.
Once you already have the mortgage, but you can still lock in.
Yep.
And to me, I always look at the fixed rate as insurance.
Yep.
Like variable rate is what I should be paying.
Yep.
But if I want to have like this, be able to sleep at night and know my rate, then I buy the insurance and
Yep.
get the fixed rate.
Yep.
So I've always looked at paying extra as insurance to have that comfort.
Yep.
But Nick and I have always gone variable, especially on rental
Yeah.
properties where the interest is a tax deduction.
Exactly, and that was the crazy thing. So what happened, honestly, what was a big thing I noticed personally was probably in 2017, 2018, 2019, a little like early, like not even 2020 really, but those 3 years was we were in what's called in the economy an inverted yield curve. So the fixed rate was actually lower than the variable for one of the craziest times. So it was like you have to take the fixed, right? It was a lot lower.
Sure, because the spread,
It was
the
a lot
insurance is
lower.
cheap.
Yes. It was a lot lower,
Yeah.
right? So a lot of people took the fixed rate, which again, like I took a fixed rate at that point.
On one of ours at that moment,
Yeah.
we also took
Yeah,
a fixed rate. It was one of the very
personally
few
bought a house
times
with a
we ever
fixed
did.
rate. Yeah, so it was like you almost had to, right? I think I remember the variables at like 3.5%, and the fixed rate was at like 2.6.
Yeah, I think I got a 2.65
yeah,
or something.
exactly,
Yeah.
right? So it was you almost had to take it. Everything's back to
Now
where
it
it's
looked
not
shit, the
inverted.
2.65,
now
by the way.
yeah, exactly.
Well,
yeah,
I closed on a couple properties in 2018 going into early 2019, and I do mortgages for a living. At the time, if people have a short-lived memory, I have interest rates of 3.84 and 3.79 on two of my properties right now.
And you felt good about them at the time.
Because the fixed rate just kept rising.
yeah.
We were approaching 4%, and
Yeah.
there were talks going higher.
Yeah.
Then who the hell would have guessed COVID hit, literally,
Yeah.
and then boom, right?
yeah.
So,
But
yes,
the variable now is like, in my personal opinion, I would take it like if I'm
Because a
doing this
variable
again,
on a primary place, you can get what, 1.7?
you get like 1.9. You can even get like
No.
depends on the bank 1.45 to 1.65.
Yeah.
1.45.
To 1.65. Like you got depends on
Okay.
the bank,
Depending
depends
on
on
the
the
And
bank.
on
deal,
a
but
rental, the variable is...
you're looking like 1.5 to 1.9
So
roughly.
if bank prime right now is what,
2.45.
2.45? So the discount on variables they're handing out is like...
Anywhere from prime minus 55 to prime minus 80,
Yeah, that's pretty
85,
good.
90 sometimes. Yeah.
Okay.
And the thing is with the variable now, even if obviously everyone sees like might be a little bit of interest rate increase, prime might go up 25, 50 beeps. Even if it goes up 25, like, you're still lower than the fixed at that point.
Mm-hmm.
So it's like you must get
Something interesting that we've noticed over the years accidentally is that on a renewal, if you qualified as a rental and get the
Yeah.
higher rate, on the renewal, the banks,
All the
I
time.
hate even speaking this language because somebody from the bank's going to listen, but like the banks will just renew you at the best rate.
Yes.
They don't
Yeah.
ask you if it's a rental
So-
anymore. And so some of our rentals on renewal recently,
Crazy
we've got
rates.
1.15 on our rental
Yeah.
renewal.
And that's our
variable.
biggest thing.
Variable.
And that's our biggest thing where it's like when we talk to clients and they have a renewal coming up, it's before we do anything, it's what do you want to do? Do you want to take money out of the property because obviously you want to get access to equity, or you just want to just renew? Because a lot of times if you are just renewing, the banks really want to keep your business after they've had you for the 5 years, because now these later years, obviously they're going to keep making money, right? So it's now they know it's going to
They don't
get
want you shopping
competitive.
around.
They
They want to
shop
keep
around,
you.
so they're going to give you something very, very
I
attractive.
always
to
push
stick you
back
around.
on whatever rate they gave me, even
Absolutely
though I
so.
know I can't qualify at the
Yeah.
moment because whatever I'm doing, I'm always like, hey, listen, I
Yeah.
might be looking around. Okay, what can
Exactly.
you
And you can
do?
play with them.
Meanwhile, I'm just crossing my
Absolutely.
fingers
Yeah.
that they
Yeah.
don't change their
Yeah.
minds.
100%, right?
and
So-
you're happy with the first offer
Oh,
anyway.
I'm really happy.
Really happy.
and so it'll take. So if you're looking to actually take equity out of your property, that rate they're giving you is not real. Just like it's going to be a completely different rate because you're doing something completely different. Now we can kind of get in the game of now let's find out the best solution for you. But if you're looking to just get the best rate, a lot of times you're like when we help clients a lot of times with this in certain ways to how to get the best rate from their bank on renewal. So definitely can reach out to us if someone needs help with that. But yeah, we can absolutely the bank is giving you a very good.
And then how
option
much
most of the
time do you need? Like we have a property up at Blue Mountain that just
Yeah.
got delayed to
First thing I was talking to Nick about this.
Okay, it's going to close in May. I think it's going to be delayed again, but let's say it closes in May. We are late January now. How much lead time do you need from somebody like us? We already own a bunch of properties.
So Nick's getting ahead of the game. So after this, I'm actually going to see him just to kind of go
Okay.
over everything. But yeah, generally what I would suggest is that, especially if just to get kind of as much time as you can give us is great. Like it's not even a bad idea for clients that maybe they don't know necessarily if they will qualify or not. So maybe the property's going to close in 6 months. Come now and just say, hey guys, what do I have to do to make it work?
Yeah.
Because it might be a talk of, hey, this doesn't work right now, but I can get it to work. in 2 or
So
3
we have to
months.
start gathering all our income statements up together.
Exactly.
Personal business
Yeah.
stuff, articles of incorporation for us, everything that we
Your
our
life-
whole
your
lives
life's coming
basically.
back,
Okay.
yeah.
And most banks will hold that rate for you. Like you can actually submit your deal in for an approval and they'll hold it for 90 to 120 days. So that's why we always tell clients, if you're 3-4 months, even a little bit out, let's get the ball rolling now.
Okay.
Right? So that we can at least get today's rate.
And lock it
Not
in.
even lock it in, but have that spread of that 4 months window, give or take 90 to 120 days. And if it gets pushed out, hey, it gets pushed out. And we just get that rate at that time.
Okay, what about this? If in the spring market, if the federal government really comes through with some changes for investors where they tweak down payments, maybe it'll be debt ratios that they play with for investors more. Who knows what they're going to do? What do you think then? Will you be able to hold anything over? Or do you think, and I know we're just guessing.
What do you mean in terms of holding?
So like, let's say they change it and say, if you already own multiple properties and you're going for yet another one, we're going to change the debt ratio qualification standard that we've had to something even harder to make it more difficult for investors to buy property. And that change is going to come into effect in Canada, let's say April 1st. Do you think if I was dealing with a bank in, a month before in March, would they allow me to carry through with the approval on the old debt ratio scores?
So or typically happens. So we see this a lot in qualifying rates because every qualifying rates going up, and that happened. It went from 4.79 to 5.25. What ends up happening? So say that day, I think it was last year.
Just explain the qualifying rate.
So qualifying rate for anyone that doesn't know is basically when you go to apply for a mortgage, your rate might be 1.65, 1.7%, but you're qualifying for that mortgage based on a 5.25 rate as of today. So like basically the banks have a rate that's much higher. Basically, it's called like a stress test. So as long as you can qualify at the 5.25, they know you're okay to pay the mortgage at 1.5%, 1.6%, whatever the rate might be. Now, so when banks do raise the rate, though, they'll let us know. We get a little bit of a heads up on the qualifying rate. Obviously, we knew about the last one that was coming up, and it was get your deals in before that are tight because they grandfather it in. So as of June 1st on that time frame, it was every deal that was submitted after that date was on the new qualifying rate.
So if it was submitted before.
Exactly, then you're okay. So it just depends on the situation. That's typically how it works, is like anything grandfathered in. So if you expire your 120 days, though, for example, if we had a rate lock in, it's technically a new submission. Then it turns into a little bit of a fight with the bank, and that's like obviously our job to go
Do you ever
fight.
win those battles?
Yeah, it depends on the deal, to be honest with you. But yeah, it's definitely just stuff we can win.
Case by case, deal per deal, right? Like everything, there's all different contingencies on files and dealing with the bank. But to touch on his point, we saw that when they were adjusting the stress test, people would qualify when it was 4.79, and they said, "Hey, this day we're going to 5.25." Well, if we were closing new constructions or existing clients that already had a live deal, the banks were still honoring the stress test at the 4.79 before the increase.
Do you guys have any banks that will allow a new investor to start a new corporation and use that to close in, or no? Is that?
Yeah, you can definitely do that. So definitely all the banks technically do, and we have access to all the banks that we work with. And so
I'll have to personally guarantee.
Yeah, so
it's a new corporation,
correct.
So there's nothing behind it.
So and even if it's an existing one, you're always going to have to personally guarantee a residential mortgage anyway. The biggest thing for buying under corp is we like to ask kind of like why, like what is your plan for doing it? Because it doesn't always make sense for people to do. They think it does because what they hear.
Why?
It's a couple different reasons. Some people go, hey, the liability. I want less liability. Well, and if you talk to any good lawyer,
if you get the right insurance.
Yeah, you talk to any good lawyer. A, you get the right insurance, you're fine, and B, anybody can crack
just
the liability.
On that, just so you know, one of our lawyers that you guys know, Jerry Gatto, just recommended. This is a big change. We used to tell everyone $2 million liability was like more than enough. He actually said now $5 million was what he was referring to as like the thing to make you feel good on your insurance, which surprised me. That's a big jump from $2 million.
That is big.
But it's not very expensive to change it. But anyway, okay. So if you have the right insurance for a liability, you feel like you're covered.
Exactly. And to break the liability anyway, so let's say that little shield that you think you have, anybody can really break. It's not, from what I've spoken about, it's not that hard to actually break and still come after you personally. So the liability doesn't do
dropping
too
down
much.
the law.
So the liability doesn't do too much. Now some people come and say, hey, for tax reasons, well, does it actually make sense for you tax reason wise? Because if you have a regular rental property, single family home, duplex, you might be only profiting like $6,000-7,000 a year. Is that really going to change if they only have one, right? Is that really going to change your tax bracket? Like, is that much? So you have to really look at it in a sense it doesn't make sense because corporate taxes are expensive, right? So does it make sense to now start paying the corporate tax fees?
So at this point, anyone listening, Lorenzo, I agree with what you're saying. Just you have to speak to your accountant and lawyer.
100%. Speak to your accountant and lawyer. Make sure it makes sense for you. Like we don't even look at it.
But we did what you're saying. Sorry, because for a couple of years, Nick and I took one of those courses that we spent money on that we didn't have to go teach us how to become millionaires over the weekend. And it said, start a corporate structure. And I think for 3 or 4 years, we were paying accounting fees. At one point, we had no money, so I was just taking the corporate tax returns and putting zero on them all because there was nothing there, and just submitting them, hoping that Revenue Canada would be happy with that. But I can tell you now, after doing it for like 15 years or whatever, it does end up being really nice in a corporate setup. Because I myself as a person, I don't really own anything. Yeah. Mm-hmm. But to get there, it's kind of shitty. And I don't think you have to do it out of the gates. No, so we tell everybody, get 2 or 3 properties, get some cash flow. Let the portfolio pay for the overhead of the corporate structure and then go down the corporate structure path.
And the biggest thing too we tell clients is, like, obviously talk to your lawyer, but buying in trust is a big thing, right? So you're still buying in your personal name. You can do what's called in trust to your corporation at that point. And that's kind of the best of both worlds, essentially, where you can look at it that way. But yeah, the corporate thing, it's good. Not necessarily great though. It just depends on who you are.
But most banks will allow.
Yeah, every bank will allow it. Obviously, there's different rules around it. So there's different rules, structures. The qualifying is the same, but obviously some banks they take longer. So for example, TD, when at the branch level does corporate deals, we can obviously do that too. They take a lot longer on corporate deals for some reason. So if you're doing a property under a
so a
holdco, different
approval process.
Yeah, but and that's different. It's just the way they do it. They take longer. The actual qualifying is the same roughly, but it's actually they take longer to approve. So we've had multiple deals where you're trying to buy under a corporation, and say they're working with TD, for example, or RBC or whoever it may be. They're taking longer to get them the approval. We can actually do it in the personal name faster. And so it's like, hey, closings come up in 3 weeks.
Okay, so we're not doing this one in the corp. We got to close.
Exactly, and then the interest thing's huge too. So it's definitely it has to make sense for the person. So whenever people come to us and say, hey, I want to buy under a corp, it's always, why do you want to do it? And let's talk about it. Doesn't make sense for you first.
What's the hardest mortgage for you guys to do with investors? Would it be student rentals? Those always are tricky.
Yeah, it depends on the bank. Yeah, student rentals very depend on the bank. A lot of banks don't like them necessarily, and the reason they don't is just because the way they look at it, the property's gonna get damaged by the students. Mm-hmm. Obviously, it might not be the case all the time. Like I was a student, like.
Well, yeah, yours were probably damaged like crazy for sure. You guys were
we were good, but
okay. And then what else? What about straight rentals? You guys generally will do up to 4 units? Is that what it is?
So residential's
four, up to 4 units.
Okay.
Yeah.
Anything commercial we do commercial too all the time. Now we've actually seen a lot more commercial deals coming through. Commercial qualifying is a little bit different too. A lot of people like the qualifying on the commercial side. It's a lot more down payment most of the time. But the qualifying is based on the property you're buying. So
you guys as like young guys working with a bunch of people, you're working with people, in their 20s, but 30s generally. So Zanzini, your age, we generally, like for your group of friends now, I would imagine, we call that the years of like they have no money because like they're getting, often getting married and having children, and you're buying a car for the family, changing out of the car they had in their 20s to the car for the family, and they're basically completely broke. They can afford their lives, but they're not buying anything extra. So we generally don't see many people in their 30s. We see people in their 20s,
yes,
and then we see people again in their 40s. But the 30s is like this no man's land. Yeah. What do you guys see? Like, you guys see people in their 40s and 50s. Do you guys at your ages think real estate will be something that you'll do for a long time? Because you're both fans of real estate and income properties. Is it playing a little bit of a role for you? Is it playing a huge role for you in your mind going forward? How do you see it?
Whether people agree with me or not, but here's the genuine, honest truth, how I feel on real estate is, for me, that's like my retirement plan, in the sense that I bought houses, someone's going to pay them down, whether they go up in value or they don't. Someone's paid for that tangible asset, that hard asset, right? Dabble a little bit maybe into private lending, into the crypto world, into the stocks that we also dabble into as well. Kind of diversify. Obviously, the holy grail and the nest egg is that main supply chain is mortgages, working my day-to-day, grinding 12, 14 hours a day, 5 to 6 days a week, right? Sometimes 7 days a week. But having those assets and building and growing for you. But I do believe in real estate. I really, really do. That's what I was brought up on from my parents. Mm-hmm. From either it was lending out your money privately, or it was purchasing real estate and have someone else pay down that asset and building up that cash flow. Obviously, it's getting a little bit more challenging as the market continues to rise. Obviously, it's tougher to get into market. Like, I'm in the market. I would love to go and buy another house right now, kind of just waiting to see where things are going. But yeah, I would love to acquire more.
And from inventory point of view, Rockstar was started in 2008. We started doing this. The first full year was 2007. Yeah. We've never seen inventory this tight. Yeah. The inventory now is just like, if you just drive around your neighborhood, there's no for sale signs. No. There's no houses available for sale.
And the average purchase price now, it's like you're buying a rental property. I bought my company. I bought one at 400. That's like, it's crazy.
It'll be fascinating because of your ages. Like, I remember when we bought in Hamilton, when Nick bought that one student rental, I'll never forget, like, it was $135,000. Yeah. And at the time we're like, holy shit, thank God you're doing it with your buddy from hockey. They did a joint venture but no paperwork or anything. They just both qualified and bought the property. And then we bought one down the street, a student rental for $250, and we're like, holy shit, $250,000. And we argued for about 2 years afterwards how Nick ripped us off on that property. And I was just joking, but Nick is really the one who will negotiate prices
Yeah,
harder
yeah.
than I will.
Yeah.
So it was just two brothers going out. I'm like, dude, you screwed us on that property. Now that property is probably $1 million or
crazy.
something. So I just wonder if you guys will reflect back and look at this time. Will property prices be cheap, or will this be a plateau, or will it come down from here? And it's just going to be
The
fascinating
one
because
thing I see, it's like you came out with their population report, right? I took a look at like how does it's a supply and demand thing, right? There's only so much soil, so it's like where are you gonna go? And everyone wants to be in one.
and that's
spot.
the weird thing in Canada, what you said, that there's only so much soil, and people will say, well, Canada has so much land. But when the builders don't build on the land, you're not going to live in a tent on the dirt usually. So yeah, we have this lack of supply. We have low interest rates. Basically, I know the Bank of Canada, I think they're going to raise rates because it's going to look good. Inflation's a bit out of control. They're going to say, hey, look what we did. It's going to be a nice narrative for 6 months. I just can't see them raising rates over the next 2 years in any meaningful way on a continuous basis. But so that means if we have low rates, relatively speaking, even if they tweak up a little bit.
And that's what I mean. People got to be like relative on what low rate means.
Yeah,
like,
yeah.
People, I raised 25 beeps. I'm at 2.65%.
Yeah, anything under 5% for me is low.
Exactly,
I'm like, that's a low rate.
Exactly.
I know that you're a little bit older than me, Tom, but like my parents always say, you don't know what it was like with 18, 22,
I saw my parents go through it. I was older. I'm 5 years older than Nick. So in the 80s, when our family, I remember people coming to our parents saying, wow, you guys got 16 and a half? How did you get that? Because we just got quoted at 21%.
Like private lending rates aren't even that high. It's crazy.
But can you imagine 16 and a half and people were
crazy.
Congratulating. I remember in Etobicoke by Islington subway station, we had family friends. I remember as a kid playing in the backyard of that family's house. And the next year we went to their rental apartment. And I remember just asking my dad, like, oh, why did they move? And, my dad explained, like, they lost the house. Because on the renewal, they couldn't afford the mortgage. In Canada, people think that that's never happened, but in the back of my mind, I'm always like, no, that shit can happen. So when now I see rates not raising, I think people can classify us talking that way as like, oh, they're just in the real estate industry. But I'm like, no, like I don't see how they raise from here.
But to even agree to your point, like as a young gentleman like myself, like I agree. If your interest rate is like under 4.5%, like in my mind, you're still winning. I'm a young guy. I've purchased real estate in the last few years. Like I just finished saying earlier, I've had an interest rate of 3.79, 3.84% for the last 4 years. Like we're not even close to that. Like we're getting there.
After inflation, but you're negative.
Yeah, but it's
real.
almost inevitable. Like rates do have to creep up, guys. Like this isn't real. Like, you know what I mean?
No, I'm with you. It's crazy. I remember in 2010 to 2012, we would look at the Federal Reserve minutes of the Federal Reserve meetings to look at how they were voting. And I forget how they were voting. I think it was like 16 people on the Federal Reserve were voting that rates would go up by, the next year. And like 4 had said they wouldn't. And I remember Nick and I saying, who are these 16 people in the Federal Reserve? I don't think they're going to raise rates. But everybody was talking about raising rates, including a well-known mortgage broker that you guys know, and it's not Dave.
Yeah, I know who
it's
it
someone
is.
else. And he was telling us rates are going up. And I think we were new to the business, and we kind of believed him. But in the back of my minds, we're like, no, mathematically, I don't think rates can go up. They're just going to sink this economy. But anyway, we're off topic. I'm curious then, what else are you guys tracking right now? Stocks you're into. We've talked about we tricked you. Zanzini got into to some of the Bitcoin stuff at the time. Now you were up for about 1 day, and now you're down on I think the purchase price that we had that conversation on.
I'm still doing okay though, but yeah.
Are you okay? Good. Okay. Yeah. Oh, good. He's coming to the defensive. I like it. But what do you guys? So outside real estate, what catches your attention? What are you guys paying attention to? Stocks, Bitcoin.
Stocks a big thing.
Do you
for
follow
us.
the NFT stuff that's going on right now?
Looking into the NFTs, our big thing. Mike's in it too, as well as myself. A lot of the U.S. marijuana stocks we're looking at a lot right now.
Got it.
Obviously, like the way everything happened in Canada, we kind of saw how that worked out. The U.S. is kind of waiting for the same thing to happen. Essentially, right? They're going to at some point. You would think they have to federally legalize. There's a lot of big companies out there doing a lot of really cool things. Very profitable companies doing really well. So we're kind of big into the to those right now. Small like side business stuff, anything that we.
I learned about that. MSOs, man.
Yeah, the MSOs.
What are they?
Multi-state operators.
Multi-state operators.
That's right. I learned about that this summer.
Yeah, exactly. So we're big into those right now.
But I don't know. The NFT stuff is fascinating. The metaverse,
The NFT stuff reminds me of tech in the late 90s. Like 90 some odd % of it is going to go to garbage. Yeah. But there's going to be some goodness that comes out of it. But a lot of people are just going to get burned.
Oh yeah.
Like I just feel like telling people, listen, you got this new digital asset forming Bitcoin. please just buy some of it and then take some of your, it's kind of like a risk profile. Like we'll tell everybody, hey, like what's your risk profile? As the risk is what's low on the risk profile. And to me, after doing some research, Bitcoin to me in that world is really low. I understand it. It's scarcity. Nobody controls it. It's just like digital asset. To me, that's low. So like I want some of that. And then as you go up your risk profile, if there's some NFTs that you're going to play with, fine, but take a percentage of your portfolio. I see a lot of younger people right now saying, I missed the boat on some big price increases on stuff like Bitcoin. I'm going to make up for lost time. And I'll tell you, this is exactly what my generation did in, when we were like kind of late teens, early 20s. It was like, I missed out on Microsoft, Cisco, Nortel, Corel. I don't know if you had never even heard of Corel. Corel is a big software company in Canada that's nowhere, but I missed out on all these things. So I'm going to get into the pets.com, and those all just went to bust. So you didn't have that much money, but I was buying some of that stuff. And then I saw like my $1,000 that I put into it just go to zero. And I thought, but if I had just stuck with some of or taken a percentage and stuck with some of what I thought the winners would have been, it would have been the better strategy. So, but that comes also with education. You need to go down this world of crypto and Bitcoin. You need to spend a lot of time, man.
Now, one book too, I was in the middle of reading actually when you sent us this summer too. I'm still kind of getting through the final parts of it. It's been really.
Is
really
that the
good.
Bitcoin standard? Or
yeah, exactly. The gold, the Bitcoin standard, and then like the NFT, like it looks like. Again, I remember you telling me how Aiden was doing it. That's a great idea, the way he's doing it. A lot of it's but it is kind of like going to the casino at some points, right? Depending on what you're doing with it.
You got to educate yourself.
As long as if you have some knowledge. When some people show me some NFTs and they're like, I'm buying this, and I ask them why they're buying it, and there's nothing there, I'm just like, oh my God. But if they can tell me the reasons that they're buying it, then I mean, at least there's some interest there, and I can
have a why. I
can explore it just a little bit. But it's I don't associate. The one thing that bugs me about this whole crypto space is that people lump it all together, and I just consider Bitcoin something very, very different. Like Bitcoin to me is as a new form of money. All the other stuff are technology platforms or technology companies. And that's the way I distinguish it in my mind. I'm like, these other things are tech plays. This thing is a digital money, and they're different.
Do you look at Ethereum the same way as Bitcoin, or do you look at those two differently too?
Don't swear. You're swearing at me now.
Oh, that's
Listen,
it. Okay.
I own some Ethereum. I own some Ethereum still, but no, Ethereum is a technology platform. Some of the people.
That's how the NFTs are based, right? You buy them in Ethereum.
They're built on the Ethereum platform. Some of them are now being built on some other platforms as well, or layer ones. But Ethereum is different because if somebody can control the monetary policy of the platform, then to me, that's not a commodity-based money. Like Bitcoin, nobody can change the rules. The rules are set. No one can change it. And some people in the Ethereum community are saying, well, this is like ultrasound money because we're going to burn off some of the Ethereum so there's even less of it. So it's ultrasound. It's better than hard money. It's actually the amount of it's going down, so it's really good. But just the fact that can be changed makes it not a good form of money to me.
Just say they won't print, like just give you more.
Yeah, because what happens if they change their mind? And tomorrow there's more money. I don't want to put my family's life savings in something that can be changed. So to me, Bitcoin serves the store of value. It even stores a unit of account. We've even been using it as a medium of exchange where we've been paying some people in it and that kind of stuff.
Oh, really?
Yeah, but Ethereum is a technology platform. It might go up 100x from here. Like, I'm not saying it doesn't have an amazing future growth. Maybe it does, absolutely. But I just, in my mind, I can't evaluate them the same way.
Yeah.
One's a tech platform. The other is a form of money. That's kind of the way we look at that.
Got it.
Anything else that you own? Like, do you own any of the other coins?
No, but no, I don't own any Dogecoin.
No
I can't even
meme
bring. No. I can't. They bother me.
But that goes back to the .com era. It's like
I think maybe I've been scarred. I've been scarred, right? And then after the .com era, it was a lot of my buddies got into commodities, and it was like, hey, there's this. What did I buy? There was like a nickel mine somewhere in Canada or something that was going to like buy it at 5 cents over some special trading desk. Like you had to call in and you buy, and it was probably going to go to 25 cents in the next month. So you call in and you buy it, and it would just go from 5 cents to 1 cent or zero. And so I think I've just seen that pattern in my life so many times. It's not that I don't think some greatness is going to come out of the NFT world. Somewhere I'm sure there will. If we can get artists cutting out the middlemen and saying someone can, produce a song and fans can support them. And if you can buy an NFT and you get a royalty of all the money that artist is making as part owner of that NFT, and the artists themselves is getting way more revenue, maybe it's like a brilliant way to distribute funds now where we don't need all this corporate structure in between. Yeah. But that's just not really developed from what I can see yet. There's actually some NFTs that are so early. I promised Aiden I'm not even going to talk about that on the podcast just yet, but that are starting to come out with that kind of thing. Yeah. That actually interests me. I'm like, okay, there's going to be like a revenue model
there's
here.
Application for
like there's going to be a stream of income through this NFT, and I get to purchase part of that stream of income. Okay, but it's not Bitcoin. That's totally different. We're talking now a business application. This is something that has to be evaluated completely separately. That at least I can talk about. So that might be interesting over the next few years. And that's where I think there's a bright future for you guys, because as this explodes, there's going to be so much opportunity. Like, we're so early with this stuff that you guys have the opportunity to jump on some of this stuff when you feel the opportunity is right, if it does make sense.
For sure.
But so I'm paying attention, and it's hard to keep up on it. There's another report here. This stuff is exploding so quickly. To just keep up on all the Bitcoin stuff with the Lightning Network and everything that's evolving there in different countries like El Salvador, making it money and using it in the country like that, to just keep up in one space, never mind everything that's going on with all the other stuff. It's tough. Then to keep up with the real estate and interest rate and the central banks, that's my enemy, the central bank. So I have to keep up to speed on what they're doing. But and then what do you guys with all the mortgage stuff? Anything? Do you have any time for anything else in your lives right now, or no? Is it just is BM Select just sucked all of your free time out of you?
Obviously, like a little bit of side stuff here and there, but we're definitely very
this
very
is the
busy.
focus.
This is the focus, and this is the one thing that's going to be for us like long term, like kind of like for us like. Dave and Dan are like they're Dave and Dan, right? Mike and are kind of the next version of that.
So if anyone listening doesn't know, Dave Butler kind of started all of this. He's been working with us since day one. Nick met him at Gold's Gym. And the first time I talked to Dave, I told Nick, I said, we can't work with this guy. Speaks too fast. I don't know about this dude. And then he got the mortgage done, and when we started this business, we literally had a lineup of like 10 mortgage brokers who were buying us Subway sandwiches and giving us free pens. And we're like, we don't want any of this. We just want you to close deals. And Dave was the only one who never showed up with anything, but he just got deals done. And for us, that was like the magic formula. Absolutely. And now he stood the test of time. And then Dan Patton started working with him at BM Select, and now you guys are there. And it sounds like the team's like
the cool thing is like Mike, like the day you Dan with there, Mike and I kind of came up as like Dave and Dan essentially. So it's kind of going to be the same sort of idea too.
Very
in the
cool.
same way, like Dan, obviously Mike worked really close. Dave and I were really close. It's going to be a cool transition.
What do your parents say? Like, so Zenzini, we'll start with you. What do your parents say? Because you walked in that day, and now it's been 7 years later. Are they, I guess, just happy that you're doing this?
Absolutely. They're super, super thrilled. They're very, very happy. They've seen how far I've come. They know Lorenzo very well, and just seeing both of us go down the same path. Like, they're very happy.
Yeah, that must be awesome for them to see, and to think that you guys came to one of our events.
And like,
I don't know. I don't know that your parents. If for you, Zenzini, at 24, whenever you said like, I don't know if I would have went to something like that at 24. I started to shift my thinking around 26. It took me a couple years. So for you to come to that, that's like a Saturday morning. We start at 8:30. Like, it's a pain. Kudos to you, man.
Well, in all fairness, I know we keep shouting out Dave and Dan being our mentors and giving us the opportunity, but everything stems back from you and your brother.
Yeah, cool.
Like Rockstar.
You're too kind. Yeah. Thank you. Yeah. But you got out of bed that morning and came to that event. You didn't have to, And Lorenzo, what are your parents saying?
They're happy. They're really happy for me now. I've got through school and finished that, so now they're happy.
Yeah, cool. Your dad, I always credit, and I don't even know. I can't remember if my memory is serving me well here, but we have this thing where a smaller group of members we call the VIP group, and we do some dinners for them. They've been around for a long time. I always credit your dad for that, and I don't know if it's correct or not. I should talk to him, because I feel like in my memory it was him that was saying, "Hey, can I spend some time with other investors?" Because your dad has been doing stuff. Your dad, when we met him, was investing in some stuff in Brampton. I think I remember does he? And we were helping him out with that kind of stuff. And I think he said, "Hey, can I spend more time with some other investors?" And we came up with this VIP group. So I always give him credit to the idea. But I actually should talk to him, because I don't know if he actually said that or not. It's time is, but I do remember your father, Sergio, sat us down when the great financial crisis was like in full swing. So we had just started. And I think it was around 2009 or 10. So we were 2 or 3 years in. And he sat us down at a pancake house in Burlington that we had a little morning kind of meetup thing at. And he goes, Everyone left. It was just your dad, me, and Nick. And he sat down. I don't know if he remembers this, but I remember it. And he said, "Are you guys going to make it?" And I remember thinking, "Oh my gosh, like there's a chance we're not." You know what I mean? When you're so oblivious,
That's the cool thing about the entrepreneur
you're
too,
so
right?
focused on just surviving and going, like you
sure.
don't even think there's a chance. Like, what? Oh my gosh, what do you mean? Like, there's a chance we're not going to make this? And
That's why you made it, though. Like especially the best entrepreneurs are like just so zoned in on their own thing that
so
it's like
focused.
nothing else can bother them.
Yeah. We were just focused, like, how can we buy? And I'll tell you one other thing. When we were doing some rent to owns back in the day, we would have tenants buy out properties. And Nick and I have been through a number of properties now. And the profit we might make on the buyout
It's never
between me and Nick might have been $30,000.
Yeah.
And we thought, jackpot. I mean, we bought the property for like $200,000. We did our rent to own. Maybe they're going to buy out this property from us at like $245,000.
And you cash flowed the whole time.
Cash flowed the whole time. We cashed out $30,000. Looking back now, if we had just kept those properties that we had been through, but we didn't have the money to keep them. Like we had to, we needed those income hits, quite frankly. But looking back now, it's just so laughable that we were like, 30 grand. And anyone listening to this, 30 grand is a lot of money. I'm not trying to downplay that. But on the same properties now, that property is worth like $850,000.
For sure.
So we were just high-fiving each other on the 30,000 win. If we had just held the property, we were talking about $800,000 property, right? So perspective, I guess.
Yeah.
But anyway, guys, I just really want to thank you guys for everything you're doing for Rockstar members, for investors that you work with. I mean, the integrity that you guys have, the way you work with people. Thank you for everything that you're doing. So if anyone listening to this, like what's the proper procedure to engage? That is it going to BM Select's website?
You can
tell us.
Email us at info@bmselect.ca. You can also call us. Not the look up number, but info at BM Select's best.
I'll put the phone number in the show notes of this episode.
Phone number. Instagram. DM us if you want on Instagram.
What's the Instagram handle?
It's at BM Select. Just BM Select, I believe.
Lorenzo, this is really great that you have this stuff. Yeah, BM Select probably on Instagram. We'll check that.
BM.select. There you go.
BM.select.
Yeah, BM.select
on Instagram. But info at
bmselect.ca.
.ca.
Yeah, so you email us there, and then we'll have someone reach out to you right away.
Yeah, cool. Anything else that you wanted? Anything else that we're covering? We only did the one shot, but apparently it was a double shot. Yeah. Now maybe we'll do another one. We'll see what you guys are up for. Guys, I appreciate this.
Thank you. Thank you for having us.
Thank you so much, man. This was awesome. Thank you. Hey, thanks for tuning in. You can find every new episode of the Your Life, Your Term show on all the major streaming platforms. So Spotify, iTunes, Google Play. And if you'd like to get free copies of some of the books that we've put together, like these right here, or some of the reports that we've put together, like these right here, you can find all of those at www.rockstarinnercircle.com. That's www.rockstarinnercircle.com. That's it for now. Until next time, your life, your terms.